Okay, what I'm looking at here is the strategy where the moving averages are all strong going up on the 10,000 tick chart and the 5,000 tick chart. And we're trying to combine trend lines, Fibonacci's, and moving averages just to kind of get a good feel for where the price is going to go using multiple time charts. We want to know the main direction. The main direction here on the 10,000 is up on the right side, on the left side, and on the 5,000 tick chart, it's also up. All right, all the moving averages are expanding and going up. For instance, if we can identify an uptrend and a Fibonacci 50% pullback anywhere on the higher time charts, 10,000 tick, 5,000 tick, and we just happen to notice that, then we go down to the lower time charts and try to look for patterns that allow us to get in. We're looking for the Fibonacci break, and we're looking for bullish candles. We're looking for trend line breaks, and we're looking for crosses above the moving averages. This trend line break right here is very interesting at the 50% level, trend line break, and it consolidates and closes above the moving averages. A very interesting place to try to take that. Bouncing off down here, Fibonacci alone would give us a bullish candle entry much lower and potentially entering in below the moving averages. So a lot of times to get the lowest price, you can't use the moving averages, right? Fibonacci will give us the actual lowest price. Trend line breaks are pretty good, and you can get a lower price than the moving averages. But I guess a combination would be using the Fibonacci levels, 50%, 62% with a trend line break is actually one of the best ways to do it. If I was going to go long using that technique, I'd want to see a bullish tendency on the 5,000 and the 10,000 tick charts. This has been bullish the whole time right here, right? All this chopping right here, it's been bullish on the 5,000 and on the 10,000 tick chart. Bullish the whole time, right? So during this chop period right here, which was very, very, very difficult to trade, if we're just using the 1,000 tick chart, if we're just using that alone. So what I want to do is look at some opportunities of what would come along if we use Fibonacci and the trend line breaks. Now on this big run up right here, I'm just going to start in this area because this is where it gets real choppy on that 5,000 and 10,000 tick chart. It's still bullish, but the choppiness is just untradeable on the lower time charts. Right here, we're looking for Fibonacci pullbacks till we can get in on some of these red and green candles on the lower time charts. All right. And a lot of times you'll have to find an area that's already been corrected 50%. In other words, this area right here has already been corrected 50%. So I use the pivot of the correction. Looking for another area that has had a correction. Right here is an area that's been corrected about 50%. So I use this pivot right here to give me the estimation for the Fibonacci correction area. All right. I'm using the trend line, but I'm using the closes of those trend line because what I want to do is I want to find the bar that closes above the trend line, and none of those bars up there closed above except for this one. It just so happens that this bounced off the 62% Fibonacci level perfectly, and it closed above not only the trend line but the 8 and 20 EMAs. Perfect. So if we get in on that candle right there, we definitely could get a 1-to-1 or 2-to-1 result on that, or at least break even. It's worth a try, in other words. We don't have a higher pivot yet until we get over here. So this is the same area we have to use for any other kind of bounces right here, the same area. Once it goes lower than this 100% Fibonacci level here on the 10,000 and 5,000, once it goes lower than this 100% pullback, then this is invalid. Okay, you got to take that away. It was good for this little move here and here only. Now we go back to the bigger picture where the Fibonacci levels are coming from down here. This last 50% correction, last 50% correction area there. I guess there was a time when we could have used this 50% correction at this point because this is another area where the price had come back and corrected 50%. So we could go up here and use that as well. And from pivot to pivot, using this pivot and using this pivot, we get multiple Fibonacci areas where it agrees that that's an area where it could react. And that's the same area we were talking about earlier where it closed over the trend line and over the moving averages using this pivot. So we use this pivot and we use this pivot, and they both line up with Fibonacci levels right there. So that's pretty good indication that it's going to probably have a reaction. Doesn't mean it's going to keep going up. So those are done. We're done with that area. And those will have to be the same areas for a repeat. Any kind of move up, we want to see a pullback to 50%. So here's another area right here. It moves up. It pulls back to 50 to 60% right there in the middle. Let's take a look at what we could have done in that area. Okay, using this bottom pivot right here, drawing it up to the top pivot, pulls back 50%, and it closes above. Let's take a look at what kind of trend line we're talking about here, because trend line's body, the body right here, it's an odd angle. It bounces, it closes above the moving averages, but it doesn't close above the trend line. Not really. Not if we're using the body of that candle right there. So that's a very challenging, depending on where you put your stop loss, either under this pivot here, right there, under that pivot right there, because the candle came down red first and then started to go up. Then we can probably get a 1-to-1 out of that. Okay, 1-to-1 would be the bottom of that box would be the stop loss, the top of that box would be the entry, and there's the 1-to-1 target. It's possible that could have been a break-even trade also. It shouldn't have lost any money, should not keep your stop loss. Once it gets to 1-to-1, you never keep your stop loss in the same area. You move your stop loss up. All right, let's take a look at something else. What do we got? Now, price pulls back to the original 50% level from the bigger time chart. So that's the mark right there. So let's take our trend line and draw from the top part down to on the bodies to see where that's going to break. This is a tricky one because if you use the body of this candle here, then it breaks here, but it keeps going down. If you use the body of this candle, it breaks here, but it keeps going down. If you use the body of this candle, it finally breaks here and continues to go up. That's a tricky grinding kind of situation. It's tricky to draw the trend line sometimes when it grinds. It's just very, very difficult no matter what. But what would have kept us out of this trade on the grinder is that it didn't close above the moving averages. Okay, that candle didn't close above the moving averages. The green candle, it broke the trend line, but the green candle didn't close above the moving averages. This green candle did not close above the moving averages. Okay, so we get all the way down here. Green candle closes, and it finally gets above the moving averages right here. And we could go like that or something. And then we figure out, okay, where am I going to enter in? Okay, am I just going to jump right in? Sometimes you got to wait for the pullback. So let's take a look at this for a second. We're talking about this green candle right here that closes above both moving averages, the 8 and the 20 EMA, right here. So let's say we get in on that candle, or we get in on the next candle, or we get on a little higher right here. Our stop loss is under that entry candle. That would have stopped us out for a loss, or we could have moved our stop as the price is going up. It didn't quite hit 1-to-1 before it came back down. So that would have been a loss. All right, or we could have entered back in on any one of these areas, put our stop loss under that pivot, saw that it was a good idea, and got back in. Even if we got back in, let's say the top of that. Okay, the top of that candle, and the bottom of that was our stop loss, then we could do the 1-to-1 this way, and certainly does. In fact, it makes a 2-to-1 return that time. So a little loss, but greater gains. Okay, you're going to have losses sometimes. Where does price pull back? 50%. Let's draw Fibonacci. Let's look. Let's look what we got. And this is a very deep pullback here. This is a 76%. Did not close below 76%. Okay, so I use all these. I'll use 38 sometimes too. And so what happens is, when does it break the trend line? Well, if we're only using green candles here, let's go. Let's even use that one. When does it break the trend line and close above the moving averages? Right here. Okay, if we use that as our stop loss, let's take a look at it. Enter in on the next candle. Use that candle as our stop loss. We get 1-to-1 on that. Yeah, absolutely. Where's the next 50% pullback from this last pivot? I like to use the candles that have 50% correction on them. All right, so let's look at this right here. Here's a 50% correction right here. Let's take a look at the trend line break off the bodies. Where does it close above the moving averages? Right here. Let's use the next candle up breakout as our stop loss. Does it go up before it comes back down to this point? Yes, it does. Comes close though. In a case like this, I'd probably be wanting to move my stop up higher. It's possible sometimes I get stopped out on these because I'm moving my stop up as price goes up. And it went about 2/3 or 3/4 of the way to the first target, which a lot of times I'll just jump up and get break even as fast as possible. So I might have just broke even on this. Sometimes I'll hold it and I will make it go to the first target. If I would have done that, I would have hit the results, right? So let's take a look at the next situation here. We've got a 50% correction on this little move here. Goes down to the 76%. Closes above, well, let's look at the trend line. From top of that down to the body, it closes. It finally closes. This is tricky because you see all the attempts to go up. This whole area is suspicious anyway. I don't even know if I would have trusted this green candle, but it does break the trend line. It does bounce off Fibonacci. It does close above the moving averages, and it does actually provide a return of at least 1-to-1 on it. Okay, but I don't know if I would have trusted that one. It's just an area of just complete and utter choppiness. Okay, so where's the next area? I guess we could take a look at this here and check this out. Does it close above the moving averages? Let's take a look. Pivot down to the bodies. See, I like the pintails. I would have liked the way that looked in real life. A couple pintails coming deep into 76, but it didn't close above the moving averages until here, and that would have been a complete failure. That one would have failed. Yep, that one would have definitely failed. And now we don't have Fibonacci to use until we just don't have anything to use. Let's see where the next Fibonacci level is to use on this. Probably this one way down here. So we'd have to pull this over. Nope, it goes up higher. We have to go to the highest level. The highest level's now up here. Okay, there's a bunch of head fakes in this area right here. I want to mark that up on both the higher time charts to see. Now, taking a look at the higher time charts here, let's take a look at that. Why would we have been interested in even using these pintails and this close above in these two areas right here? Once the first one failed, I don't know if I'd do the second one. This area is so choppy that if we just simply take the same requirements, that there would have been several fake outs. If the fake outs are more than the gains that we're making, then obviously this technique is a bad technique. So we'd have to figure out how to eliminate some of the fake outs. So over here in the 2000 tick chart, we're seeing all this area where all these little green candles close above the moving averages. That's the same area.
Time for the Benzinga news.
That's the same area we have over here with it closing above the moving averages. Well, where's the trend line breaks at? Right? Where's the trend line breaks? Is there any because if there's not any real trend line breaks, it's too choppy to even get a trend line break, then it's not going to work. So here we go. This is the first one I think that's legitimate. It closes above the moving averages. It broke the trend line here. Pintails look good. Looks like it's going to continue. So we put a stop loss underneath that candle and we get long and it fails immediately, and that's the end of that. Goes right back up and it doesn't get any higher. We could avoid that one, truthfully. The next time it closes above the moving averages is right here on this candle here. But let's take a look at it does bounce nicely off a Fibonacci level. Let's take a look at the trend line. Any trend lines that we're looking at here? So yes, beautiful. It closes right above. This looks good, but it immediately fails. Okay. If we get long in that red candle right there, we don't wait for it to pull back. A lot of times we need to wait for it to pull back. We might have got a lower stop loss on that. Let's just max it out and say we got in right away. Although I wouldn't recommend that. We usually like to wait for pullbacks. And that's a failure. Okay. Now, I don't see a good trend line opportunity on the next ones because it's so sideways that you don't really get any trend line that makes sense. Sure, you can draw trend lines from the pivot and create the body of that candle there, the body of that candle, and you know not to jump in on that failure, failure, failure. You got 3, 4 failures in a row here. It's not getting any higher. And you probably could avoid all these because if you use the body of that candle, it doesn't even really close higher than that till over here. And so this one could have been avoided altogether. And so the trend line is actually helping us to avoid some. I don't know if I would have done this one here. Because of the sideways activity, we could have avoided this one, and we could have avoided this one, and eliminated some of these losses. I'm not saying that you're going to eliminate all of them, but should be able to eliminate quite a few. So what's next? What's next? It drops back down here into some support areas. It goes all the way back to 100% pullback of those Fibonacci's. So we can't use the 100% pullback of those Fibonacci's. We have to go and use a higher time chart Fibonacci. So over here on the 2000 tick, you see, if we just simply pull this one over, we can use this one. Redraw it, has to be redrawn. And here we go. This is the area that we're talking about, right at 50%. So let's come over here and draw some trend lines, okay? From the highest pivot or from one of the most prominent pivots, we draw a trend line. Let's draw it brand spanking new here. This one from that pivot coming down to the bodies of the candles. It breaks right there. It finally closes right here. And we try to get in on the next candle. The next candle turns red. Actually, it doesn't close above both moving averages. So that saved us. Here's the 20 up here. Did that candle close above it? No, it didn't. So that's why I like using multiple variables. So we'll take the next trend line, which is this one, draw it from the top part, down to the body of candles, and see when it finally breaks. Okay, when does that finally break? Well, it breaks the trend line here, but it doesn't close until way up here. So that's when that happens, we have ourselves a serious problem. We don't want it to close that far away from the moving averages. We'd like to see if it's going to pull back. Now there's a momentum play that can be done here, that on the next candle, we use the next candle body at the bottom as our stop loss. So it's a possibility. If we got in on the next candle, we'd have to use the stop loss of the bottom of that candle we got in on. It's the entry candle bottom. The entry candle bottom. All right, so now we have a potential for 1-to-1. All right, where are we at here? On the next area of interest, we're going to have to take a look at the 5,000 tick chart here and see where we're at, because once we start seeing this kind of behavior here, chopping up and down around the 20 moving average, sideways activity, continuous range-bound activity, that's difficult to really, be committed to anything. Right here on the 5,000 tick chart, though, you see these pintails coming in off of the 50 moving average, and that's the next area where the trend line breaks on the smaller time charts. But you can see these pintails up here where it's failed. So I don't know if I would be excited about this breakout right here, to be honest with you. The next area would be right over here, where it comes down to Fibonacci level, down here. It goes all the way up here and closes way up here above, and the moving averages, and up into the area where it's been failing. So just common sense, we could say, you know what, I'm not excited about this market. It's going to have to get out of this range. It's going to have to show something. It barely got a 1-to-1 in this last one here. We could have done the same thing here, however, where it breaks above. Let's take a look at it, and in all fairness, let's catch some of these that don't work. So let's say it bounces right here. It closes too far away from the moving average, but we're going to get in on the next candle. And the next candle, we use the bottom of that candle, and the entry point is above the candle that closed above the trend lines and the moving averages, which is this green candle here. You can clearly see it's a small stop loss, but it fails immediately. So there you go, right? And the next one is this area right here. Let's go ahead and do it, being in all fairness, right here, right? It doesn't close above the moving averages. It does right here on this candle here, however. So we could use this bottom of that entry candle as our stop loss, enter here. And again, when we have, it does work pretty good there. It's closer to the moving averages. It's, I don't know. Maybe we just wouldn't be trading any of that anyway, because it's still in that area. The area that closes that we're interested in is still in that range. So if you're going to do every one of them, then you're going to have some massive losses also. The gains, it might just be break even on the whole entire episode. But when it's ranging up and down like this, it's very tricky, but that's how I would do it. Or you could just have to switch to a support and resistance kind of trading where we're looking for bullish candles on the bottom area. Go ahead and draw on the higher time charts, the support areas, and just look for bullish candles. Whenever you have a bullish candle, it's going to go up a little bit. That seems to be a better strategy in this area, in this kind of market. But anyway, I'm just trying to figure out which strategy and I want to use. But it looks like if you want to trade a lot, you have to have a lot of strategies. And they have to be profitable strategies. You can't just, create something out of thin air and hope that it works, which is, what we do in the beginning. We try to find something that works, something that's reasonable. But there's really nothing more reliable than support, resistance, trend line, and Fibonacci's. Moving averages, you can add that in, but the Fibonacci, trend lines, support and resistance are the keys to coming up with a strategy that works, in my opinion. Candle formations and candle patterns are top-notch. Price action itself is the best. So whatever strategy we come up with, it has to be fundamentally built around price action, support resistance. I think Fibonacci is so key, and trend line breaks. All right, and moving averages come in that area, but they come in last. All right, peace.